It's now time to transition this call. This is officially your RX for Forex. That is what this is. The gentleman that I am bringing before you right now has his PhD in finance and economics, over 25 years experience. And he is here tonight for you so you can understand why you do what you do. I want to turn this call over to none other than Dr. Craig Bythewood. Dr. Bythewood, are you on the call?
Yes, I am. Thank you very much, Ms. Dyer. Great questions, great questions, great questions. Very impressed with the questions that were asked tonight. I love the excitement, love the energy. I love where we're going. I talk so much about the collective consciousness and how powerful we are when we think as one. And so there's an energy right now that really is moving and it's motivating to each one of us. So just know how happy I am that we're moving in this direction. So great job from our facilitator, great job from the facilities. So this of course is a talk with the finance doctor, our RX for Forex. And one of the things that I always talk about is how important it is that we understand all of the components of this economic pie that we are feasting on, that we are baking in the oven so that it will come out and be tasty, and we add some whipped cream to it so it feels good. And I like that we talked about cryptocurrency at the end, which can be the whipped cream that we add to our foreign currency pie. So just very excited about where we are right now. And there are a couple of things that were stated today or tonight in our training call, which made me think about that Bythewoodism. If you know what you're doing, you will always have a job. If you know why you are doing it, you will always be the boss. And of course, that phrase makes us think about being an actual boss of a particular company or a particular division or department or even firm. But in reality, it's deeper than that. It's about being the boss of a process. It's about being the boss of information. So one of the things that I heard Ms. Dyer say tonight was the Dow. We need to understand the Dow. So my oldest daughter's in Miami, and she called me and said, "Dad, I'm expecting a package. Can you please look out for it?" So I said, "Daughter, who's delivering the package?" And she said, "DHL." So there was a pause, and we both kind of knew what was coming next, because one of the demands that I put on my daughters is that we always de-acronymize, meaning we don't use acronyms unless we know what it stands for. So before I could get it out, she said, "Dad, I don't know what DHL stands for." And normally when this happens, I'm able to tell her what it stands for, but I had no idea. So I looked it up, and it just happens to be three people's names: Domley, Hilliard, and I forgot. So three names, and they're actually British last names, and the three people got together. But I didn't know until I found out the why it's called DHL. So I said all that to say this. When I heard Ms. Dyer say the Dow, I thought about the connection between that interchange I had with my daughter and the Dow, the why. Why is it the Dow? Why is it called the Dow? So let me spend a little bit of time giving you some breakdown on how this works. So two people got together in the 1800s, the late 1800s. One of those guys, his name was Jones. The other guy, his last name was Dow. And what those two dudes thought about was this. They said, you know what? The 1890s is a real new type of time. It's a really transcendent time, because 10 years ago, we had something called the Industrial Revolution, which is big because this was the first time that we moved from an agricultural-based society to actually having people make money based on technology. Things like steam engines and cotton gins and railroads. We never did that before. Before that, it was all about the horse. The horse was our vehicle. And now we actually have these engines and these machines that people are actually producing and making money. This is a revolution. So because it was an industrial revolution, they said to themselves, you know what? We might benefit if we come up with a way to present how these new technology companies or these new industrial companies are operating, and we can share with them. Now notice I use the word index. So once again, an example snatched from the headlines of my life as a father of a future college student. There's a scholarship that's due on Saturday. And so my daughter went to Miami and left her laptop and wasn't able to complete the scholarship. So she called her dad, her enabling, spoiling her dad. So I'm filling out the application for her while I'm fussing at her. And it said, what is your GPA? And then in parentheses, it said, unweighted. So I was all ready to write 5.7, but it says unweighted. So I said, what's your unweighted GPA? And I wrote it down. Hear me. GPA, grade point average, is an index. It's a numerical way of representing the performance that a particular student has accomplished up to a certain point. GPA, an index that tracks all of your grades and says, this is how you're doing. Guess what? The Dow is the same thing. It's an index. Are performing at the same time. So we call it Dow as a nickname, but historically, Dow and Jones got together and said this. We're going to pick 30 of the biggest industrial companies. Now this is big because they're new. In the 1850s, no such thing as industrial companies. But now in the late 1890s, it's real, it's big. This is a revolution. So they decided to pick the 30 top industrial companies. The 30 top industrial companies, and to come up with a secret index, their own GPA. Why is it secret? Because if it's secret, then people will pay for it. You heard Mr. Rogers mention the Wall Street Journal. The Wall Street Journal was one of the first people to buy the Dow Jones Industrial Average. So by buying it and using it and presenting it, they're showing credibility. So to this day, in 2019, the pip whisperer, Miss Tasha M Dyer, says the Dow. She's still talking about the Dow that many decades later. So that's the purpose of the Dow, to come up with a numerical index that tracks those 30 stocks. Now, in our desire to understand why, and let's pause for a second, time out. Why do we care? We care because we have access to this foreign exchange market. We have access to this cryptocurrency market. But if we understand the infrastructure, if we understand the background, if we understand the principles and concepts that undergird this, it now makes every trade, every perception, every web analyzer, everything that we see and deal with, it makes it have more power because we understand where it's coming from. So let me ask you a question since you guys brought up college. When you're in college, why, and of course I'm asking this rhetorically, why do students like those professors who drop the lowest exam? Why do students like those professors who drop the lowest exam? And just for the record, I'm not one of them. They like that because if you drop the lowest exam, your score is always potentially higher than it really is, or the perception or the actual score is higher than the actual performance. Well, guess what? In the Dow Jones Industrial Average, every time one of those 30 companies starts performing poorly, every time one of those companies starts doing bad, guess what they do? They take it out of the average and replace it with another one. So all I'm saying to you is, when we use measures like the Dow to represent our perception of how the market is doing, that's one of those be your own bank principles. where banks represent that number is always higher because they drop the lowest firm. If 4 companies start to suck, they put out the average and replace it with some better companies. So it's always an average that presents a picture of the market that's a little bit higher than it is. Why do we care about that? We really don't. Because we know that banks have always positioned themselves where they make money when the market goes up and they make money when the money goes down. And that's where we are. Remember the example that we gave on Tuesday, where we talked about at one point in my life, it was important to gain weight. Another part of my life was important to lose weight. So we are going to be in a position of power and strength, regardless of whether we're gaining weight or losing weight. It just depends on the situation. Just like for us, it depends on the currency pair. It depends on the market. It depends on what time of day it is. It depends on the impact of the news. So I am 100% in agreement with Mr. Rogers that news is going to impact what goes on. But I also recognize that no matter what happens, we're good. Because we're not predicting what we think is going to happen, which is what the stock market has trained us to do. We're just operating off of the movements. All we care is that it moves. Nobody goes to an amusement park and predicts which way the ride is going to go. You just enjoy the ride. You just enjoy the fact that it's up and it's down and it's up and it's down. And you get up the ride and say, that was fun. Let's ride it again. That's what we're doing, y'all. Let's ride it again. Let's get that first set of 20 pips. Now let's do it again and let's ride again and let's ride again and let's ride again. So we're so blessed that we have the opportunity to learn about the index, to understand the logic of how the index works, but then boom, we still know that this knowledge only helps us to understand what we're doing better, but it really has no indication on what we do. If the Dow goes up, we can still get pips. If the Dow goes down, we can still get pips. Now let's go ahead and complete this. Let's be thorough in this conversation. So as always, whenever someone comes up with a great idea, someone else will come up with a similar idea. We never heard of Uber. Then you had Lyft. And you know somebody else is coming up with it. Actually, there are Amazon's about to do something similar. So the bottom line is, when someone comes up with a good idea, somebody else jumps on the bandwagon. So 2 other dudes, beyond Dow and Jones, they got together and they said, hey, why don't we come up with an index that improves upon what Dow and Jones did? So one of them was like, well, what's your name? What's your last name? He said, well, my last name is Standard. And the other guy said, oh yeah, well, what's your last name? Well, my last name is Poor's. So Standard and Poor's got together and they came up with an index of 500 stocks. So instead of looking at 30 stocks like Dow and Jones did, they decided to look at 500 with their thing saying, well, we'll improve upon the process. So people got tired of saying Standard and Poor's 500, so we shortened it to S&P. So now when you hear somebody say the S&P 500, it's just a different index. Didn't I explain to you that with my daughter's scholarship application, there were 2 GPAs? There was a weighted GPA and there was an unweighted GPA. Just 2 different ways of expressing the same numerical representation. That's all we're doing here. Dow Jones, we're looking at 30 stocks. S&P, we're looking at 500 stocks. If you've ever taken statistics, you remember that one of the principles you learn in statistics is that as you increase the sample size, the reliability of the data doesn't really change that much. So the S&P 500 and the Dow Jones Industrial Average, they pretty much show the same thing. If you look at both of them right next to each other, they're moving together. So it doesn't really matter which one you use. Dow came first, so it's like the Xerox of copying. So people look at it with a little bit, it's like Vaseline instead of petroleum jelly. So it has a brand name that made Ms. Dyer say the Dow instead of S&P, when in reality, they always give them both at the same time. Just like the application wanted the weighted GPA and the unweighted GPA, when we say the market's up today, the market's down today, we're talking about both of them. We're talking about the S&P, and and we're talking about the Dow Jones Industrial Average, which now we shorten to the Dow or the S&P. Now, I feel if we're going to talk about this, we should really go all the way there and make sure we understand the whole picture. So let me share with you two things. First, let me share with you the background on why this is important for companies. Now, you may be thinking, wait, we need to understand how cryptocurrency works, and we need to understand how foreign exchange works. Correct. But think about it. Right now, you are your own business. Right now, you are an entrepreneur. The Prentice Cohen started his entrepreneurship today. So I've said many times, if we're going to talk about being our own bank, how do we know that in the future, all of the rectangles that you see right here will get together, take all of our trading profits, create our own bank, and then provide capital with a much better set of morals than what some financial institutions do? There are all kinds of things we can do with the profits that we're going to make collectively. So there's value in us understanding how the process works if we ever decide we want to create our own company based on what we learned from IML, and we want to understand the way raising capital works. So here's how it works. When you are a company, when you are a firm, and you decide you want access to capital, you make a decision. And the decision is called to list, L-I-S-T. You want to see where you're listed. Example, let's say you got a product to sell. If you have a product to sell, you got to sell it somewhere. So you could, on one extreme, sell it in the back of your trunk. On the other extreme, you can sell it at Neiman Marcus. So anywhere from trunk all the way to Neiman Marcus, there are different places that you can put your product. So what I'm saying is, when we decide we want to raise capital, when we decide we want to issue stocks, when we decide we want to let people come and buy our shares publicly, we decide where it's going to be. We list it on a particular place. Now, very simple. When a company decides to raise capital by issuing stock, they have two choices. I love taking the complexity of markets and breaking them down and making it easy so we all can walk away with the knowledge. So two places you can put your put your stock. Two places you can list your stock if you want people to find them. Two places. Number one, on a physical exchange. What's a physical exchange? New York Stock Exchange, American Stock Exchange, some of the smaller exchanges. So you're physically putting your stock on the place. So if somebody wants to buy your stock, they have to go to that place. They don't have to physically get in their car and drive to the place, but when they actually do the trade, right next to the stock symbol, it'll say NYSE or AMX. And that's where you go, that's where the broker goes to get the stock. Two choices. Choice one, on an exchange. Choice two, not on an exchange. Choice two, not on an exchange. Only have two choices if you want to list your stock and make it available to the public. On an exchange, not an exchange. Now, if you decide not to do it on the exchange, let me give you a little history. Before 1933, banks controlled all of the infrastructure of financial markets, meaning if you wanted to invest in stocks and bonds, there was no computer, so you get on your horse and you ride in town and you'd walk into the bank and you say, I'd like to buy stock. And then they would pass you that stock certificate over the counter. So to this day, we call it OTC. If you go Yahoo Finance right now and you find a stock that's not on exchange, it'll say OTC. Well, a Bythewood daughter would know they have to deacronymize that, and they would know that means over the counter. Over the counter historically simply means that you went to the bank and the bank gave you the stock or the bond over the counter. So real simple. If it is done on an exchange, it's at one of those exchanges. If it isn't, if it's not on an exchange, it's over the counter. Now watch this. Didn't I tell you that Dow and Jones created this index based on the fact that they saw what was going on technologically, and they represented the fact that in the 1890s, things were changing in terms of the way in which technology was affecting industry. Well, guess what happened? The same thing happened at the end of the 20th century. Because in the 1980s and the 1990s, just like you had an industrial revolution in the 1800s, in the 1900s, you had a dot-com revolution. You had an internet revolution. So what started to happen was a lot of big companies who were technology companies, who wanted to keep their money in R&D, who wanted to be able to put all of their money into these large technologies, they decided not to be on an exchange. You know what I didn't tell you? I didn't tell you that when you make a decision to be on an exchange, it costs $2 million. So you have to pay them $2 million to be listed on an exchange. So those companies that were major technology companies in the late 1980s and 1990s, they decided to keep that money and to be over the counter or to not be on an exchange. Now, am I the only male? This is about to be a very sexist comment. I don't care, because if I make you laugh, it'll make you remember this. Am I the only male on this call, in this Talk with the Finance Doctor, that was ever young and was dating a woman and you were enjoying the relationship and having fun, but then she said, how do you define our relationship? Where do you see us going? We need a label. What's the label? How do you define it? So the woman wants you to define the relationship. So you got to come up with a label for it. Well, that's exactly what happened with the over-the-counter stockbrokers. Because with the on-exchange brokers, they knew who they were. We're the New York Stock Exchange. We're the American Stock Exchange. But the over-the-counter people, they didn't have a label. They were insecure about their relationship with the financial market, so they had a big meeting. And when they had a big meeting, they said, here's what we're gonna do. The New York Stock Exchange has this real cool ticker, and all the stocks just go, but we over-the-counter, insecure brokers, we don't have that. So we're gonna come up with our own system of how to make our stocks be presented to the world. And they called it an automated quotation system, an automated quotation system. So again, because they were insecure and they had to have a label, they had this big meeting. And when they had this big meeting, they said, well, we want to define ourselves. So should we be an American organization? No, let's be national. And then they said, well, should we be an organization? They were like, no, let's be an association. Well, who are we? How do we define ourselves? We are security dealers. So they came up with a national association of securities dealers automated quotation system. Let me do that again. National Association of Securities Dealers automated quotation system. So they came up with an automated quotation system so they could compete with the New York Stock Exchange. They defined themselves as a national association and they labeled themselves as security dealers. So how many of us have figured out that that is NASDAQ? National Association of Security Dealers Automated Quotation System. So of course, many of us listen to these acronyms and we never ask what they mean. But the Bythewood daughters have to ask because their dad's crazy. National Association of Securities Dealers Automated Quotation System. So all it was just a way to compete with the New York Stock Exchange ticker. But something very interesting happened. What happened was so many of these .com companies, so many of these technology companies who were not paying the $2 million for the exchange so they could keep their own money for R&D, they were now over the counter. So people started realizing, wait a minute, these technology companies have their own pattern. You know how we talked about how different exchanges, how different pairs have different patterns? We've been talking about that for 2 months. So they noticed the same thing about these technology companies. These technology companies are having different patterns. So somebody said, hey, why don't we do like Dow and Jones did? Why don't we do like Standard & Poor's did? And why don't, since we were so insecure that we had to label the relationship when everybody was just having fun in the market, why don't we just go ahead and become an index? And they did. So now When you watch the financial news, they say this: the Dow is up and the S&P is up and the NASDAQ slightly down. So now it's an index. Nobody asked the question, what does it stand for? Since nobody's de-acronymizing like I make my daughters do, then nobody even thought about the fact that it's an index, even though it's named for an automated quotation system. National Association of Securities Dealers Automated Quotation System. So what's the point? Why are we talking about this? It's just a little wireization to just increase our knowledge base of how these markets work and the history of the markets, because let me tell you something. Let me tell you something. Can you imagine if you were around in the 1890s and you saw an entire industry become born? And then you were around when the Dow and Jones created the first stock index. So you were seeing history. Well, you need to understand that we are in the same spot. We're about to see history. Did you see or did you hear when Mr. Rogers stopped and said, wait a minute, let's take what we're doing and let's cryptocurrency-wise it. So you need to understand that some of the things that we're dealing with right now, some of the things that IML is exposing us to are the same type of trend-setting scenarios that are going to create the new paradigms of markets that we're about to walk into. The difference is everybody else was focusing on the what up to this point and really didn't get the why, but we'll be in a better position because we want to be our own bank. And we understand that the way to be your own bank is to understand how all of this works. So you just learned 100 years of stock price history in 27 minutes. And now it's yours. And it'll be yours forever. And you'll be able to take this knowledge and watch what's happening with these future markets that we're on the verge of and understand better how to present yourself. So this has been a talk with the finance doctor. Unless there's a question, comment, or testimony, I will pass this over to our host and or hostesses.
I have a testimony.
Testimony.
Well, it's actually a comment, actually.
Okay.
Dr. Bythewood, thank you so much for all that you do. I knew back when you were in the 8th grade that you were going to be great. You were the smartest kid on the block with the highest GPA.
I appreciate it.
And I appreciate what you do at this time. I know it's a little late, but we can cover this maybe on Tuesday.
Okay.
I had a question about building credit.
Yes.
Is Credit Karma reliable source? Because I'm getting a message that I'm not using a ton of my available credit.
Right.
I should be they're offering credit cards and loans and such, but I'm not ready to get into that. But what about building credit? Because eventually I want to build my mansion and I'm going to need some credit to do that.
Right.
And iMarkets Live is going to afford me to do so.
Okay.
But about building credit, should I go ahead and take some of their offers? Are they reliable? And that is it.
First of all, thank you for the compliment. I really appreciate that. And I need you to know that, well, first of all, if I was so smart, why was you acting funny at the Stardust skating rink that time when I tried to holler? Okay, so.
That was back in the day, and it don't matter now.
Ooh, the finance doctor's petty, y'all.
Oh my God.
Yes, he is. Don't go there, Dr. Bythewood.
Petty Pendergrass.
Don't go back there, Craig.
So, this is such a good question, and it has so many layers that I literally could take the entire talk with the finance doctor to address it, and I want to. So I appreciate that you allowed me the opportunity to do this on Tuesday. So I am asking every single person that's rectangularized right here to make sure you're in the same spot, 10 o'clock on Tuesday, and I will thoroughly answer that very good question. But let me say this. Take no action with Credit Karma until we talk on Tuesday. Thank you very much for asking that question.
Yes, sir. I got it.
Yep. Any other questions, comments, or testimonies about the Stardust skating rink circa 1982? All right. I will now pass this call back to our host and our hostess.
Wow, is all I have. The whole why behind the what tonight was such a good call. This is exactly why we have these calls, ladies and gentlemen. This is exactly why, because it's one thing to understand and to know what you're doing or how to do it, but it's so important to know why you're doing what you're doing. And what we learned tonight, and now we have the ability to trade on these indices and trade on these indexes, and the foreign exchange market is phenomenal. It's just phenomenal. We also learned a few things that, you know, we go back in history and have some fun on this call as well. So tonight was really powerful and it was really, really impactful. Now, I'm excited because Orlando, Florida, get ready. We are coming to Orlando. Be Your Own Bank Expo. It is going to be a power-packed event, Also, the 20th of July, get registered, bylbchallenge.net. You're ready to go to the next level. You're ready to take it to that next level. This is an event you do not want to miss. What gets done gets duplicated. Our coach and our mentor, Mr. Gerald D. Roger, he has a coach as well. You see, he's the visionary behind the movement, but yet look what we've done and the families we've impacted and where we're actually headed. So the proof is in the pudding, but we are headed, his coach, the phenomenal job we've done already, but his coach is going to be here July the 20th. So I don't care what you have planned, what you have scheduled, what you have going on. Nothing is more important, because this BYOB movement, this BYOB challenge, the challenge you accepted to be the best that you can and take it to the next level, you want to be in a place. Also, make sure you had a PDF. I'm going to get out of your way soon because I know we got some trades, because we all have accepted the challenge. We've accepted that PIP Gold Challenge. So by the end of this month, by doing a BYOB cash out at a minimum of 20 pips a day, in 20 days, we will have over $2,000 in our account by following the chart, by following the goal. So each and every last one of us have accepted the challenge. Don't let your minimum be your maximum, but follow the rules. Your minimum is not your maximum, but we want to make sure we follow the rules. But at a minimum of 20 pips a day, in 20 days, you have over $2,000. I'm excited because that means everyone is winning. So with that being said, ladies and gentlemen, bylbchallenge.net. For those of you building distribution centers, ATM, I almost said machines, ATMs, then I will see you here on Sunday night at 8 p.m. For the rest of you, you have a wonderful and blessed evening, and this will officially conclude this call. But I will see everybody in Orlando on Saturday.